All right, class, good morning. So today is our last lesson, and this lesson will be your revision. And this revision will focus to share with you the technique in your exam. All right, because this round our exam will be very different. No more paper exam, it's online one. So I will share with you the technique. So I also request you follow this technique in your final exam, because this will be the, I can say, the only way for me to check. All right, the only way that for me to check whether you do your own. So please follow this, class. I think my message is very clear. Please follow this. All right. Okay, so the example that we used to discuss and we used to practice our exam format will be your assignment. I think you also have this, right? This is the assignment. So we will go through this question, and then I'm share with you how to use the Excel file to present your answer. All right. So class, I haven't shared my screen to you, huh? That's why you cannot see. All right, share my screen to you. All right. Can you see my screen, class? Can I? No problem, right? Okay, very good. So we use the assignment as an example. Right? We use the assignment as an example for the exam practice. So in your exam, you also giving an Excel file like this. So in this Excel file, you have the trial balance, you have the statement of changes in, SOCI, statement of comprehensive income. You also have this statement of changes in equity. You also have one statement of financial position. All right, this financial statement will be provided to you in the exam. All right, and then, hey class, don't worry about the black color here, because I don't want you to write your answer in other area. That's why I mark it as black color. All right, you only need to show your answer here, and this column should be enough for you in your exam. Clear? Use this, use this. Don't be afraid when you get a black color Excel file. It's okay, because this is the area that I mark into black color, because I don't want you to write anything over there. So easy for my reference. Right, so I restrict your area of writing, so you just write here. Can or cannot? Can I? All right, so let's start. Kelly Limited is specializing in IT product. Below is the trial balance of the company as at 31st December. All right, wait a second. Let me do some setting. Right. So their financial year ended of the company is at 31st December. All right. So let's look at the detail. So you see that we have a set of financial statement, and in this financial statement, when you see the item with a percentage, perhaps you can do a remark. So meaning that you have to look into detail for this. All right, you need to see whether we provide sufficient interest in the account or not. So we need to provide accruals. So when you see something in a percentage, perhaps you can make a remark, so you won't mix up. Okay, you will remember yourself that you need to calculate the accrual of interest for it. All right. So what is the requirement? The requirement is to prepare statement of comprehensive income, statement of changes in equity, statement of financial position, and lastly, statement of notes to the financial statement if we have this item. All right. So we start from the first one. Guys, can we start? Are you ready? Yes, So perhaps you can, because I think you haven't print out your assignment, right? So at this moment, perhaps you can get a text pad so you can write down the working for the individual adjustment. All right. Because the main purpose is to show you how to prepare, right? The main purpose is show you how to prepare, right? We start from the first one. The value of inventory as at 31st December 2017 is 78109. However, it is noted that a batch of the product amounting to 30,000 is damaged during the shipment. Carry Limited is expected to incur additional 10,000 to repair costs to fix the product before it can be sold in the market. The estimated selling price of this batch of product is 35,000. All right. So obviously, this adjustment is talking about what? The adjustment for the NRV inventory. So they say that the value of inventory is 78,109. Am I right? And in this 78,109, one batch of the product, the cost is 30,000. And this inventory, they required a repair cost amounting to 10,000. And then the selling price is 35. All right. So obviously, this question is testing your NRV. So we need to do an NRV testing for this damaged product. All right, for this damaged product. So for the normal item, which is the difference between your 78,000 and 30,000, is 48,109, right? So this one is okay. So we no need to do adjustment for this one. We focus on this one. So cost is 30,000. NRV equals to 35,000 minus 10,000. 25,000. So we should choose the lowest one, right? This one. So the total inventory value should be the 25,000 and 48,109. So this is the answer. So we can do a remark. This one change to 73109. And this is the working. We can note down this. All right, class. Shall we, for this closing inventory, we no need to adjust. We no need to adjust in the trial balance. This one no need, because the closing inventory is out of double entry system. Okay. Next. So the next item is saying that including in the administrative expenses, there is a payment of fire insurance of 3,600 for the period they cover from 1st April 2017 and 31st March 2018. So this is fire insurance, right? So second adjustment regarding fire insurance. So for this fire insurance, the financial period, the accounting period for the company is 1st January 17 to 31st December 17. And the fire insurance, the period cover from 1st April 17 to 31st March 18. So obviously we have made the payment which beyond the financial period, right? This payment is beyond the financial period. So what is this? This is a prepayment. Prepayment by 3 months. So we have to determine the portion for a prepayment. So we use 3,600 times 3 months, the prepayment period, and divided by 12. So what is the amount? 900. Thank you. 900. So double entry, we debit the prepayment account and we credit to the administrative expenses, 900. So this is the working for item number 2, fire insurance. All right, class. Okay, right? So now I'm going to show you how to take in this adjustment. So we go to our trial balance. First, we write prepayment because we don't have prepayment. You can scan the trial balance, we don't have the prepayment, so you put 900 here. Debit prepayment. And then credit on the administrative expenses, right? This one, administrative expenses. Because you cannot put the one item in two amount, right? So the 900, you will move to the administrative expenses here and then minus. So this is the adjustment. And you can see that after the adjustment, the trial balance total still remain tally. All right, class. I want to remind you something, right? Something. I think in your assignment, I say that you can exclude this, right? You can print out the tax pack and you can do the adjustment yourself. You no need to show this working in the trial balance provided. But in your final exam, this is a must. I want to check your working. So make sure you also show your working here. Is my message clear? Class, is my message clear? Clear, eh? So don't say that you did not get any information. And then you may ask a question, sir, ayo, you only give us this one Excel file to practice. This is not enough for me. All right. So as a good lecturer, I have do something for you. Let me show you. All right, class. Look at the last title here, the revision. I give you the Excel file from the home exercise from, yeah, I upload this for you from 5.3, A2, if I'm not wrong, 5.2 to 5.3. There are 3 exercises for you to practicing this. So don't say that you don't have enough resources for practice. This is upload for you. You can try yourself, because don't only try to use the Excel to present your answer in your exam. It is too late. You should start using this Excel file for your practicing. My message very clear, class. Yeah, wow, finally, got someone say thank you, good lecturer. So touching. Just kidding. All right, this one, I upload for you. Why only chapter 5? Think about it though. I think we have a very close relationship. My relationship with my student should be quite okay lah. And we are in the similar age group, right? So you should understand what is the meaning for my behavior. Class, understand or not? You know lah, we are in the same age group lah, 90 something or 20, 00, right? Hey, my message clear or not, class? Woo. Okay, you should understand my behavior, right? Sure. Chapter 7, chapter 7 very hard for you to show working. No need. Only for this. So yeah, you think that don't have chapter 7, right? Up to you lah. You all decide yourself lah. Okay, so I'm going to close this. Okay, okay. Don't say that I'm not helping you. All right. I always help you, right? Okay, we continue. Item number 3. Including in the operating income, the company has received commission in advance of 4,200 during the year. So income in advance. So number 3. So this is what? Commission income in advance. So for commission income in advance, right? So we have 3 situations. The first one is what is the by right amount, and what is the receive amount. And because this is in advance, right? So we know this is in advance. So the question say that in advance amount is 4,200. So receive, for the receive, right? You always refer to trial balance to get the receive amount. Other operating income. Other operating income. Where is it? This one. So 12450 here. So tell me, by right, how much we should record in our income statement? What is this amount? I have to use the receive minus the in advance or add with the in advance. Add me. I think majority 8 meh? 8 or minus? Woo! Wow, we got 2 games, eh? Hey, class, let me explain to you. This year, I received 12450 as my commission income. However, multiply, don't simply bluff, Okay, this year we received 12450, right? And then including in this received amount, I have received in advance. It means that this is my liability. This amount not belong to me. So what is the by right amount? Minus lah. So you use 12450 minus 4,200. So how much you get? 8250. So for this double entry, we debit other operating income and we credit to commission income in advance. Hey, sorry, wrong amount. 4,200. Right, this is the adjustment for number 3. All right, so we have to show this double entry in our trial balance. So first, we minus 4,200 in our other operating income. Next, in the credit side, we put commission income in advance. So in the exam, you have to follow this method to adjust your trial balance. Right, let's move on. This one, motor vehicles are depreciated by using straight line method. The estimated scrap value of the motor vehicle is 5% based on the cost. The useful life of motor vehicles are 5 years. So obviously, this is related to the depreciation of motor vehicles. The next one also refer to the depreciation. And then all the depreciation and asset written off expenses shall be recognized in administrative expenses. So when we calculate the depreciation, we should put the depreciation amount in the administrative expenses. So we start from this one. So number 5 is regarding the motor vehicles, right? Sorry, number 4. So number 4 is the depreciation for motor vehicles. The method we use is straight line method. So straight line method formula, we use cost minus scrap value and divided by the useful life. So scrap value is 5% on the cost, and then what is the cost? The cost of motor vehicle is 250,000. So 250,000 minus, we use 250,000 times 5%, 12,500. Thank you. Yiseng. And then the useful life is 5 years. Answer? 47,500, huh? Right? So 47,500 is our depreciation for the motor vehicles. All right, so we have to provide the double entry. We debit the administrative expenses, 47,500. And then we credit to accumulated depreciation of motor vehicles. So let's take in this adjustment. Class, my speed okay or not? Am I too fast? My speed okay or not? Administrative expenses, where are you? Still okay, eh? So we add 47,500, 47,500 on the administrative expenses. And then in the accumulated depreciation for your motor vehicles, we add 47,500 as well. Plus, my suggestion to you is after you make the adjustment, kindly check your trial balance. Okay? After you make the adjustment, kindly check your trial balance. Make sure that the amount is tally. All right, we move to the next adjustment. The next adjustment refer to the depreciation. Depreciation for plant and equipment, and then this plant and equipment are depreciated by using reducing balance method. The depreciation rate is 15% per annum. All right. So number 5. This is the depreciation for your plant and machinery. What method we use? Reducing balance. Formula of reducing balance, we use cost minus accumulated depreciation times the depreciation rate. Cost for your plant and machinery, 140,000, and the accumulated depreciation is 58,000. 140, 58. The depreciation rate is 15%. Answer? One, two, 300. All right. 1 to 300. So this is the answer. Let's provide the double entry. We debit admin expenses 300, and then we credit to accumulated depreciation of your plant and machinery 300. Okay, so let me show you how to record this. So in the administrative expenses, we add another 300 in the accumulated depreciation of plant and equipment. So cost, you cannot just add the amount. You need to press an equal here. The symbol of equal here. So this can be formalized and changed to the amount. If you put like this, cannot one. Excel cannot read this. They have to put an equal here. All right. I think this one basic Excel skill, you should have it. All right. So next, the next adjustment is regarding the office equipment. On 31st December 2017, there is one office equipment cannot be used and shall be written off. The cost and accumulated depreciation of the obsolete office equipment at 1st of January 2017 is 20,000 and 10,000 respectively. It means this is cost. This is accumulated depreciation. This transaction is yet reflecting. It means that not yet record in the trial balance as at 31st December 2017. The depreciation rate of office equipment is 20% based on straight line method. All right. So we have to do working for this office equipment. So this is item number 6. Office. This is the depreciation of office equipment. And the company use straight line method for the depreciation of office equipment. So for office equipment, right, the cost is 60,000, the accumulated depreciation is 10,000. So we use this, cost minus scrap value. This one giving a percentage, 20%. And then times a rate. So the cost is 60,000. Scrap value not mentioned in the additional information. So we assume it's 0. Rate is 20%. So how much for this? 12,000. So this is the first step. We calculate the depreciation as a full. So you may ask a question, sir, how about this this office equipment being written off one? Normally we need to calculate the depreciation separately, right? Why for this one we no need to do the calculation for separately? Look at this. This office equipment is written off at the end of the year. this office equipment is written off at the end of the year. It means that from the beginning to the end, right? 1st January to 31st December. This written off asset start from here, use up to that. So we shall charge depreciation for full depreciation for the written off asset, meaning that we no need to do any adjustment on the depreciation calculation. But if you want to separate calculate, can or cannot? The answer is can. You can separate calculate and you will get the same answer. All right, so we provide the double entry for this one first. We debit admin expenses, 12,300, and then we credit to accumulated depreciation of the office equipment, 12,300. Next, we need to determine the written off. For the asset written off, the cost is which one? 1, 2, 300. Which one? Hey, sorry. I think I followed the previous one. sorry. All right. Cost, cost is 20 at when? 1st of January. So at 1st of January, the accumulated depreciation is 10,000 as well. All right. How I get this information? From the textbook here. Okay, from the additional information. 20,000 and 10,000. Cost and accumulated depreciation at 1st of January. So during the year, the depreciation for this asset is how much? 2,000. How do I get 2,000? I use the cost 20,000. Hey, 4,000. Sorry. Sorry, 4,000 here. How do I get 4,000? I use 20,000, the cost times the depreciation rate 20%, so I get 4,000. So meaning that at 31st December, the date of written off, the cost of the asset is 20,000. The accumulated depreciation of the asset is 14,000. All right, so this is cost. This is accumulated depreciation. So for asset written off, right, meaning that we cannot receive any money, any consideration for this asset. So the different 6,000 is what? Asset written off. Right? This 6,000 will be asset written off. And this asset written off is the expenses of the company. Next, I'm going to show you the double entry. Double entry, I debit accumulated depreciation of office equipment, 14,000. And then I debit asset written off 6,000. And I credit the office equipment, 20,000. So this is the double entry. All right. Class, Jala asked me a question. Do I need to show this kind of working in the exam, right? This one no need, because it's quite difficult for you to show me this working. So I give you the convenient. That's why I ask you to do the adjust on the trial balance. Because if I want you to show me this, right, then you need to take photo and then you need to write in Excel or whatever lah. I think this one is really time consuming. That's why I give you convenience. No need to show me this working in the exam, but you need to adjust in your trial balance. So this is the reason why I ask you adjust in the trial balance. Give more 2 hours, maybe we can. Cannot lah. Okay, welcome. So this is the working. You note down first, and then I will show you how to adjust in the trial balance. All right, I think you have record this, right? So let me record this for you. So we record the depreciation first. In the administrative expenses, we add another 12,000. In the accumulated depreciation for your office equipment, we add another 12,000. So after the adjustment, take a look on the trial balance, make sure this is balanced. Next, we have to record the second adjustment, right? Second adjustment is regarding the asset written off. So we debit the accumulated depreciation of office equipment, right? Because we cannot put on the debit side because accumulated depreciation is a credit balances. So we minus 14 here. And then we add 6,000 on the administrative expenses. And then we minus 20,000 on the cost of the asset. After the adjustment, check your total. Make sure your adjustment is correct. All right, class, any question on this adjustment or not? You want to ask? Which part you are not sure and you wish me to guide more? Hi, class. No question or not? No, so far so good, can follow, All right, let's continue. After this, I will give you a break. Okay, but we still have many to do, right? We still have half to do. Or shall we take a break now? Shall we take a break now?
No.
No, continue.
Finish all the required information first.
But if we finish all, then almost end of the class already. Then we end early lah. If we can, we go through the things first,
Okay.
Okay. This one. The revaluation reserve is related to the revaluation of land of the company. The revaluation reserve shall be adjusted to 300,000 as at 31st December 2017 to reflect the changes in the fair value. The changes of fair value shall be included in other comprehensive income, and the changes in the revaluation reserve shall be indicated in the statement of changes in equity. So I think this one is a common mistake by student, because majority of you think that, oh, I need to add 300,000 in my land. No, because it say that revaluation reserve shall be adjusted to 300,000. Meaning that the current revaluation reserve is how much? 120,000, right? We need to add some amount to make this 120,000 to 300,000. This is the requirement. So we do an adjustment for this. This is number 7. So number 7 regarding the revaluation reserve. So the current amount is how much? 120,000. So the required amount, the new amount is 300,000. So what is the difference? Different by 180,000. This 180,000 is what? Increase in the asset value. All right, increase in the asset value. So when you have increase in your asset value, how you do? You debit the land value and you credit to your revaluation reserve. And remember, this one, right? You have to show in other comprehensive income. All right? You have to show this in your other comprehensive income. And then you also need to show this in the changes in equity. Take note that. So we record this. So in the land account, we add 180,000. In the revaluation reserve, we add 180,000 as well. So after the adjustment, check your total. Make sure your total is still tally. All right, can we move on? Then, next one. They say that no depreciation is charged on the land and all depreciation and written off expenses should be recognized in administrative expenses. So this one, okay lah. This one no need to do anything. This is just a further explanation for the previous. Next one. Including in your trade receivable, there is one customer unable to make repayment of his outstanding amount. The bad debts amounting to 4,000 and this amount not yet to reflect in the trial balance as at 31st December 2017. It means that bad debts 4,000 will not yet record in the account. KLIMI Limited is of the view that the rate of provision for doubtful debt shall be 8% based on the net trade receivables. Changes in the provision for doubtful debts and bad debt should be recognized in other operating expenses. So this one, number 8, regarding your bad and doubtful debts. Right, bad and doubtful debts. So first one is the bad debts, right? The amount of bad debt is 4,000. So double entry for these bad debts. We debit other comprehensive, other operating expenses, sorry. Other operating expenses. 4,000. And then we credit to trade receivables. 4,000. The next thing they want us to do is provide provision for doubtful debts, right? So the formula for provision for doubtful debts, we use trade receivables minus bad debts, and then multiply with the percentage. So what is our trade receivables? Trade receivables and payables. The debit one is your receivables, only the credit is your payables. So we use 78,200 minus 4,000 times 8%. So how much we get? 5,936. Hey class, ask you something. When I show the calculator, you can see the calculator one, right? Cannot. Can. But the chat, the Zoom group chat, can you see this in your on the screen sharing? Oh, cannot. I see. All right. Yeah. Sorry, not very good in IT. All right. So this is the answer. 5,936. All right. So when you have a provision for doubtful debts, you need to do a comparison. So you find out that the company has a provision for doubtful debts as at 31st December 2016, right? It means that this is last year. This is last year provision for doubtful debts. When you have a last year provision for doubtful debts, you need to do a comparison. So this one is this year. So your last year amount is how much? 3,200. All right, 3,200. So we have a difference of 2,736. Am I right? We have a difference of 2,736. So this 2,736 is what? Increase or decrease? Increase from 3,200 to 5,936. The increment is 2,736. So this is increasing your provision for doubtful debts. When you have increase in provision for doubtful debts, this is an expenses of the company. So double entry, we debit other operating expenses. We credit to provision for doubtful debts. So this is the answer. All right, so let's record the double entry. I think we don't have other operating expenses, right? So we create other operating expenses in the account. So first we have the 4,000 here because of the bad debts. So we reduce the receivable amount by 4,000 as well. So after one adjustment, check the total. Make sure your total is correct. Next, we have a provision for doubtful debts, right? Increased by 2,736. So this 2,736 we credit to the provision for doubtful debts account. So make sure that your after adjustment amount is tally with your this year working. I repeat, make sure that your after adjustment amount is matched with your working. So far so good, class. Can follow, huh? All right, so we move to the next item. Next adjustment. Kelly Limited accounting policy is to recognize a preference share as non-current liability, and the dividend of preference share shall be classified as a finance cost. So let's have a look. This is a preference share. They give a 8% preference share. The quantity is 200,000, but the value of each preference share is 50 cents. So giving a total 100,000. So let's check whether we have giving any preference share dividend before. Do we have preference share here? No, right? We don't have preference share here. So we have to calculate the preference share dividend. So this should be number 10, number 9. Preference share dividend. So the value for your preference share is 100,000. The dividend rate is 8%. So answer is 8,000. Because this 8,000 is unpaid, right? So we have to charge accruals. Double entry. We debit the finance cost, 8,000. And then we credit to the accruals, 8,000. How to know it's unpaid? In your trial balance, did you see any payment of your preference share? If not recorded in your trial balance, meaning unpaid. Okay, welcome. All right, so I think we can move to the next adjustment. The director of Kelly Limited proposed, look at this, proposed how would you usually mention if it is paid? All right, if it is paid, right, actually you can get from the trial balance. Why? Remember the double entry. If you make payment, right, definitely this payment will record in the trial balance. Because we know the double entry, right, we will debit the preference share dividend, we will credit to the bank. If this entry is not recorded, it will not appear in your trial balance. If not appear in your trial balance, we can say that this is unpaid. So wait, clear? If this is paid, sometimes you can have a look in your trial balance, or in the adjustment here, it may also say that, okay, I paid partially or what. But following the trial balance will be the most correct one, because from the trial balance we can know whether this is paid or not paid. Okay, because if you paid, definitely will show in the trial balance. If not showing in the trial balance, we can assume that this is unpaid. Okay, all right. So this one, back to this. Let's say this is a proposed final dividend, right? Proposed final dividend. It means that we only show this in the notes to the financial statement. And 5%, how we calculate? So this is number 10. And this one is based on a percentage, right? The percentage is how much? 5%. The percentage is 5%. So what is the value? 500,000 of the share. The value of share is 25 cents each. So giving a total value of 125,000. So if you are giving a percentage, right, you can straight away use this. Or if you write 500,000 times 25 cents times 5%, you also get the same answer. All right, this refers to the number of share. This is the par value per share. Or you just use the total value, because in the trial balance you are giving the total value, right? So both formula give you same answer. So 125 times 5%. So you get 6250. This one 6250 as well. So for this one, no need to record in trial balance, but we only show in notes to the financial statement. All right, so this one no problem. We move to the next one. This one also a common mistake. increase your general reserve 45,000 to 45. No, it's not like transfer 45,000 to the general reserve. Increase. So this amount transfer from the retained earning. So what is the value of my general reserve now? The value of my general reserve now is 38,000. So this is regarding the adjustment for your general reserve. So original is 38. The new amount should be 45, meaning that you transfer 7,000. You only transfer 7,000 to the general reserve. And this one, no need to adjust in trial balance because we only show in statement of changes in equity. All right, let's move on. Last one. The management of Kelly Limited estimated the corporate taxation for the financial year is 17,000. All right. So 12 corporate taxation. Because your corporate taxation is what? Unpaid, right? So you just need to provide the double entry. Your double entry will be debit corporate taxation 17,000, and then you credit to income tax payable 17,000 as well. So this is the double entry. So let us record this double entry. So corporate taxation, this is the expenses, 17,000. And then we have income tax payable. Have you record adjustment 9 in TB? Adjustment 9. This one? No me? Oh, yo, haven't no. Thank you, thank you. Thanks for reminding. Okay, this one not yet recorded. 5 minutes call. Never record. Thanks for reminding me. Zhuo. So good to have you in the class. And also Aiden and the rest. Those always reminding me on this and that. Thank you so much. If can, I want to buy you coffee. You know, I used to buy ice cream for my student. Like sometimes, occasionally, when we have normally on afternoon tutorial class, sometimes I'm come late for lunch. So to apologize, so I buy them ice cream. But too bad, have online lesson, so you don't have this opportunity. Thank you so much, Chua. All right, so basically, yes.
So I think there is one more like interest.
Yeah, one more.
Okay.
Yeah, haven't finished. I said I just want to mention. Okay, we have complete all the adjustment, but remember I say that for those having a percentage one, you need to pay more attention because examiner, they like to dig a hole for you to jump. Something like this. They want to check whether you have you have very caution or very careful in the exam or not. Like this, long stop. Like you, you like me, okay, no problem. You can like me, I'm okay one. Yeah, exam, of course, must test your understanding. And then those very paying attention or very caution one, of course, you need to reward them. For example, hidden point here. Okay, so this is the interest of loan stock. So my loan stock value is how much? 150,000, right? 150,000 times 5%. So the total value should be 7,500. 7,500. But how much I paid during the year? We can have a look. Mana? We only paid 3,000 during the year. So the paid amount is 3,000. So the unpaid amount is 4,500. So double entry, I debit the interest I debit loan stock interest 4,500 and I credit to accrual 4,500. So let's record this. So we interest on paid on loan stock, we add another 4,500. And then the accruals, we add 4,500. Okay, that's all. And then class, I think because of the limitation of time, I don't have the enough time to show you the income statement, the CIE and SLP. So I'm going to upload this to you so you can have a look. All right. So one thing to take note, when you present your finance cost, right? When you present your finance cost, right? You have to use the finance cost for the preference share together with your loan stock. You only present a group amount which is 15,500. Don't show it separately. They are in the same category. They are in the category of finance cost. So remember to add them together. All right. Class. That's all for the our assignment. And then I have shown you the guide, right, on how to do. All right, let me stop the recording first.